Hi, this is Russell Longcore from portableonlinebusiness.com, and you were just looking on a search engine for the words investing after retirement. You know, there's hundreds and hundreds, thousands of people that look for the same words each month, just like you did. And what that tells me is that you're looking for investments after retirement. Boy, that was hard to figure, wasn't it? But that also tells me a lot more. Just with those three words, that tells me that you're looking for places that you can put your money now that you have retired to get a better return on your investment. Well, it's looking pretty bleak out there as far as retirement, and you can probably get a better rate of return, but then you have to figure out how much safety that you can, or how much volatility and how much risk that you're comfortable with taking. Let me tell you about an article that appeared in the New York Times just over the weekend, and the article was in their money section, and it was entitled, "For Retirees, a $1 Million Illusion." And it basically says this: $1 million isn't what it used to be. And here's a pull quote from that article. A typical 65-year-old couple with a $1 million in tax-free municipal bonds wants to retire. They plan to withdraw 4% of their savings a year, a common rule of thumb drawdown. But under current conditions, if they spent that $40,000 a year, adjusted for inflation, there is a 72% probability that they will run through their bond portfolio before they die. Here's the reason why. Bond yields used to be 4% and above. That was normal, and it was also a tax-free bond. Bond yields are terrible now, and it doesn't look like they're going to get any better. And so if you're taking out 4% a year, I'll give you an example. Let's just do the math. If you take out 4% a year because you need it, because you need that plus Social Security to live on, right? And you're only getting 1% or 2% as a bond yield. Okay, so you're taking out your interest. Used to be you could take out 4% a year interest and never touch the principal. But now, if you were only getting half that, if you were only giving 1 or 2%, you're taking out part of your interest and part of your principal. You're taking out all your interest and part of your principal. So that's the reason that this article can say that there's a 72% probability that if you had $1 million in a bond fund, that you'd run out of it. And with every other kind of investment that's more volatile, the chances are greater that you'd lose even faster. And it says here that the life expectancy of a person 65 today is 86. Now it's 86 for women, it's 84 for men. And that 1 out of 10 people who are 65 today are going to live to age 95. That's what the Social Security Administration says. So here's the problem for us baby boomers. If you were a baby boomer, you're one of the people that were born between 1946 and 1964. And there were 76 million babies born during that period of time. Now, for the ones that are still living, in 2011, which you take 46 and add 65 to it, you get 2011. So in 2011, those people that were born on the leading edge of the baby boom in 1946, those people are now turning 65 at a rate of 10,000 a day. And so that's distorting the retirement market big time. Just like we distorted all the other markets as we were coming up through our lives. Baby food and diapers, and then toys as we grew older, then transistor radios, and then cars, and then college educations, and then the real estate business. We distorted all those as we came along during that period of time, and now we're starting to distort the retirement marketplace. So. Is it a coincidence that the Social Security Administration also announced in 2011, just when the baby boom started hitting, that they were paying out more than they were taking in, which means essentially they're bankrupt? That's not a coincidence, folks. That's just the way it is, and that's not going to change. So how are you going to take care of this? How are you going to plan? What are you going to do to make up for the losses that you may have had in your investment portfolio over these last few years? Because there have been 4 economic crashes during our working lifetime as baby boomers. And there may be another one. We're in a big recession right now, and I don't care what the government says, we ain't coming out of it anytime soon. So what are you going to do? Well, if you've lost assets because of the economies, you've lost the most important thing that you used to have, which is time. If you're a baby boomer, you don't have time anymore. You can't go back and re-earn and save all that money and invest it right and make up for a retirement. You're 20, 25 years away from being in a box in a cemetery. So it's over. You don't have the time to do that, but there is a solution, and that's the reason I'm talking to you today. If you'll go to portableonlinebusiness.com and go to the top of the page where you see all those different words up there, find the word that says retirees. Click on that word and it'll take you to another page. Go to that page and read about the principle of equivalent assets. And here's basically what it is. We can help you, we can assist you in setting up a home-based business, costs you very, very, very little, sometimes not even anything to start. We can help you to start a home-based business on a part-time basis. Doesn't make any difference if your health is good or not. You can still sit in front of a computer, and we can show you how that business run on a part-time basis can throw off some monthly income for you that's equivalent to the investment portfolio income that you lost. Now, I don't know if we can replace it all, but we can replace a bunch of it. It depends on your hard work and your dedication to it. But go to Portable Online Business. The link is just below here. Click on the word retiree, leave your name and your email address, and let's talk about how we can make your retirement much more pleasant and the retirement that you always dreamed of. Thanks very much for watching, and I look forward to talking with you soon. Bye-bye.